Hey, welcome to our first-time homebuyers class. I'm going to go over the 6 costly mistakes that you can avoid being a first-time homebuyer. So let's get into it. So as a first-time homebuyer, you're probably feeling concerned, stressed, intimidated, anxious, and uncertain. These are all normal. Don't worry. You're in the right place. We got you. And that's why we're going through this class, is to help you get better educated and better prepared. And if you don't know who we are, we're the Beach-Greco mortgage team. I started this in 1997. I've served over 1,000 people and manage over 250 million in mortgages. And I put this on the screen not to brag, but so you know that you're in the right place and in good hands. And I'm Aundrea Beach-Greco, and I'm one of the most reputable loan officers in Las Vegas. And I average at least 20 word of mouth referrals every month. And why that's important to you is because I'm going to take great care of you. And I also want you to feel confident in referring me. Also, my local reputation is going to go a long way in your home search because with my name on your pre-approval letter, my reputation will help you securing an offer and being more successful. Working with a mortgage professional that understands money and knows exactly what you need to be successful is more important than ever. My experiences and my processes are going to help save you money, reduce the anxiety, and save you time as you prepare for the most important financial decision of your life. Why homeownership? Well, you've got to pay for a roof over your head, and you might as well invest in yourself instead of paying your landlord's mortgage. And homeownership builds wealth. And in this example, as you can see, in 5 short years, this person's built almost $100,000 in equity. And that could be yours just by natural appreciation, by you doing nothing more than purchasing a home. So now we're going to go over what are the steps? What do you need to do? So you need to finish this webinar, go through, get educated, get pre-approved, book a call with our team so you can go house hunting. But the first and foremost piece of this is getting pre-approved and knowing what that takes so you avoid those costly mistakes that we're going to go over. You can go to our link, ilendlasvegas.com. That's our online application. And also here is my Calendly link to book a call with me. The first mistake being a first-time home buyer is not getting pre-approved. It's really easy to shop with your eyes on Zillow or Redfin or Realtor.com and see all these amazing houses, but you don't know your budget. So you have to get pre-approved for a mortgage, right? And that entails looking at your credit, looking at your income, and seeing how much you have for a down payment. Now, starting off, you might chat with some people and you might think, oh, I need to just be pre-qualified. And some other people will say you need to be pre-approved. Well, there's differences, and I'll go over them really quickly. And it depends on your timeline, when you're looking to buy. The sooner you start with this process, the better prepared you're going to be. A pre-qualification, though, is just a rough estimate. We haven't pulled credit. We've just kind of chatted over some numbers, done some calculations on the calculator, and that's just it. It's just a pre-qualification. An actual pre-approval, we go over exactly your buying power, how much you can borrow, at what the rates are at that time, what programs you're approved for, what down payment assistance you're eligible for. We pull a credit report, run it through our automated system, and you're ready to buy. Now, if you're not ready to buy, we're going to put a mortgage plan specific to you in place so that when the time is right, you will be ready to buy. The loan pre-approval will help you determine based upon these 3 factors, right? Your credit, your income, your assets. It's going to determine how much house you qualify for. It's going to show a seller you've done the work. You have bargaining power with that seller. You are pre-approved. It's going to show you your monthly payment, how much you expect out of pocket, which loan program you're eligible for, and which one's best for your needs, because a home loan is unique, just like you and I. And we're also going to go over any home buyer assistance programs. Now, there are some do's and don'ts through this process. We'll guide you through those steps along the way, but basically, we're going to talk to you and don't change your buying habits. Don't make any large purchases. Don't go charging on credit cards or moving money here and there. Because again, if we're looking at your credit and your income and your assets, we don't want you doing anything to your credit to jeopardize your score. We don't want you doing anything with your job to jeopardize your income. And we don't want you to do anything with your bank accounts to jeopardize your down payment. And a pre-approval will absolutely save you money. It shows you your buying power so you can shop with confidence. Our company offers a closing guarantee, so if we don't close on time, we give you $2,000. Our job is to help you be a successful homeowner, eliminate that stress, because I'll tell you what, that's priceless in this process. Mistake number 2 is ignoring the incentive programs. What are they? What's a buyer incentive program? Well, as a first-time home buyer, you've never owned a home or you haven't owned a home in the last 3 years. And these programs, they could be specific to your region. They might be dependent upon income or credit score. They may be forgivable. They might be a down payment assistance or a grant. There is definitely various programs to meet your needs. So we're going to show you. Here's an example. Anna wants to buy a house. She wants to buy a home for $450,000. We're going to use a minimum down payment of 3.5%, which is $15,750. We're using FHA financing, so her total loan amount with the upfront mortgage insurance is $441,849. The incentive, which is also the down payment assistance she's getting, is $22,092. So that's covering her whole down payment, and it only leaves $4,900 left of closing costs that she has to cover. And in 9 times out of 10, you can probably get a seller to cover some of that for you in this market. So there is an example of a program utilizing down payment assistance so that you get into this home for little to no money down. So we have various types of mortgages. There's government mortgages, which are FHA, VA, and USDA. There's conventional and non-QM. All of these programs, again, they're unique to your situation. And when you apply, we will go over all of the options that are applicable to you because it's important that you know what's available instead of someone saying, here's your program, take it, because that's not the case. You get choices. So conventional loans, they're not insured or guaranteed by the government, and they're a deal for buyers with strong credit and larger down payments. They do have first-time homebuyer programs with 3% down. Next, we have FHA or USDA. These are government-backed loans. They allow for easier credit scores and down payment requirements. And that's what we normally use for most of our first-time homebuyers. And then lastly, we have VA loans. These are for veterans and military personnel, and they do not have a down payment required. Now, the eligibility for these are different because they are different types of loans. And typically, these are the criteria that we need. Most loans need at least a 620 credit score, and the down payment for first-time home buyers starts off with about 3% or 3.5% for conventional versus FHA. Military and veterans, they have zero down programs. So here, look at this chart. What do you think suits you best based upon what we talked about? Okay, depends on first your credit score, next how much you're going to put down, and then the third part of that is debt to income ratios. Now it depends on how many bills you have, what the minimum payments are, what we're trying to accomplish. So that's where we sit down and go over all of these options and what suits you best. And lastly, for the outside the box applicants, a lot of self-employed people, independent contractors, 1099 workers, they don't qualify for the typical conventional financing. So they're what we call non-QM loans or non-qualified mortgages. And they're just investors that allow people with irregular income, different credit scores, or unique situations to be able to get financing. Because again, my motto is mortgages for everyone. What you can and can't use for down payment and closing costs, right? You cannot finance your down payment and closing costs. You can't get a loan for it. And we don't like undocumented cash. So when we sit down and go over your mortgage plan, we're going to talk to you about all of these things because it's important that you're prepared and educated so that you make the right decisions. Now, if there is cash or a gift coming in, we're going to educate you on how to season those funds so that you can utilize them for your down payment. Your loan approval is based upon the three C's: your ability to repay the loan, your willingness to repay the loan, and the collateral. And the collateral is the property, because of course, some properties have certain unique situations that make lending on them more challenging. Mistake number 3 is using your bank. Your bank has its place, but most large banks look at you as just a number. They typically have stricter guidelines and they don't cater to situations that are outside the box. And trying to communicate with them is challenging because you're just a number. And most of them don't offer the down payment assistance or grant programs. And goodness gracious, if you needed to close quickly, whew, that's challenging as well. Now, I can tell you with banks, and rates. Not all lenders are created equal. This is just to show you where rates have been over the last decade. And of course, as you can see, there's in the middle of the screen this gray section, and that's COVID. And then we saw rates dip to the lowest they were in history. Now rates are hovering in the mid sixes. Now we're all expecting rates to come down, but in the meantime, again, not all lenders are created equal. So oftentimes I'm going to tell you that the lowest rate doesn't mean it's the best. It often will cost you more money. There's what they call loan level pricing adjustments with different kinds of financing. So depending upon the property, how much you put down, your credit score, different things, that could cause the rate to be higher and the cost for that to be higher. So again, you just have to be mindful of what that looks like. And we'll go over all of that with you when that time comes. The purpose of this is just to show you some information so you can be educated and ask the right questions. Next mistake we see people making in the home buying process is skipping the home inspection. It is super important for you to know what is going on with that house because you want to be aware of anything that might be a deal breaker, right? If you don't get a home inspection, you might lose your negotiating power. How are you going to know if the property has structural issues or safety issues, mold, radon, carbon monoxide? What about future repair costs? How do you know how old that air conditioner is and what its life cycle is? Maybe there's something going on in the roof or a stain in the ceiling. Um, and you don't know if that garage conversion is code. Those are things that you have to be aware of. And skipping a home inspection, which ranges about $300 to $400, depending upon what kind of home inspection, costs you thousands of dollars in the long run. So we advise you not to skip the home inspection. Mistake number 5 is ignoring hidden costs, right? Being uneducated about the process, then you wouldn't know about these costs. But there is things that are included in purchasing a home, such as inspections, appraisals, taxes, insurance, maintenance, a homeowners association. By ignoring what these are and learning about them could cost you tens of thousands of dollars. And you have to know what's included in your mortgage. So part of your mortgage is the principal and the interest of how much you borrow. Then you have property taxes. Those are going to be different by county and state. And homeowners insurance. That gets included in your mortgage payment. Insurance. You have homeowners insurance, which covers the insurance in case of a fire or flood. But if you put less than 20% down, you could have mortgage insurance. And those are costs you need to be prepared for. These additional upfront costs are due at the time of contract. Your earnest money is usually 1% of the sales price. Home inspections are about $300, and the appraisal starts at about $550 and goes up from there. So mistake number 6 is overextending your budget, right? What would that do? Overextending your budget, maybe you feel that now. It causes stress. You could ruin your credit, ruin your relationship, lose money you put down, or the house that you've worked so hard for. That's why we're taking all these extra precautions so you don't make these mistakes. Because the truth about buying a home is you need to budget and plan smart. Don't take on a higher payment today expecting to refinance later because it may not happen. We have to make sure that you're not changing your lifestyle just to buy a home. And that's where a good lender comes in to help you make the best financial decisions for you and your family. While you're going through this process, I think it's important, whether you use us for your lender or not, that your lender is going to help you secure the best home loan based upon the interest rate, the options, and what's unique for you with the least amount of hassle. And then who's going to help you manage that going forward? So, question for you, how do you feel? Are you excited, confident, you feel a little more informed? I sure hope so, because we want to make you a successful home buyer. So book a call with us today. Here's my Calendly link. You can Google my name. My application is online, or go here to ilendlasvegas.com and do the application. We'll schedule a consult call, and this is what it looks like when you go there. So if you click apply online, it'll take you through the process and ask you to enter your information. Then what I ask you to do is schedule a time with us so that myself and my team, we can talk to you about your next steps and put a plan in place, because not everybody is going to be ready. So if you go to this link and apply, you may just want to see your numbers. You may want to see what your credit's like. We may want to just start prepping for next year. Wherever you are in that journey, it is okay. And if for some reason, again, you don't want to do the application, go to the call, book a call with me. I'm happy to answer any questions you might have. That's why we're here. And that's why our team has been so successful. And I look forward to helping you on this journey of home ownership. Thank you so much for your time.